Every few years in the stock market, you get a time period in which investors say, I'm done with this stock market. I want out. I'm selling everything. I don't want to buy the dip. Call me when the market is interesting again. Call me when things look good again. Let me be very crystal clear. We're in one of those time periods right now where investors are throwing their cards on the table and saying, I fold. I'm out. I'm done with this. Wall Streeters are doing it left and right now. And they'll say, if you're buying stocks right now, you're crazy. You're insane. What are you doing buying stocks right now? Well, some of us like to flip our flapjacks. What can I say? VIX is 40 plus. Right off the bat, we're going to talk about the VIX in this video because if you look at every single time period the VIX ever hit 40 plus, you're going to notice a clear correlation that basically equals something, okay? So I'm going to show you that. Then we'll start talking about stocks in this video. We got a lot of stocks to talk about in this one here today. I posted several very important things just in the past 24 hours on X. I want to show you guys a few of those things. I bought a bunch of stocks here today. We're going to go through all that in this video. Then I want to react to this video. Oh my gosh, there's one other human in the world that bought Nike stock other than me? Oh my gosh, you got to be flipping my flapjacks. Bryn bought Nike. We're going to go ahead and react to that 1 minute clip. I want to go ahead and react to this one from JP Morgan's David Kelly. JP Morgan, they just raised their recession odds to over 60% now at this point in time. I'm looking very forward to hearing why they had done that, okay? And then we're going to go ahead and get into this one. Dan Ives, tech will see an economic Armageddon if these tariffs stay. That's going to be an interesting one to react to. So busy action-packed time, folks. There's one thing, and there's only one thing I need from you guys, and it's for you to smash that like button on this video. I hope you can do that for me. I'm putting in crazy hours right now, and I hope you guys appreciate it. Also, thank you everybody subscribed here to the channel. We're on the road to 90,000 subscribers here on the reaction channel, so appreciate y'all for being here, okay? Pin comment today, I'll put my X. If you want to follow me on X, you want to follow me on Instagram, I'll put that as pin comment today, okay? So, listen, the VIX is 40 plus. What does that mean? I'll tell you what it means. Buy, buy, buy. And I don't mean buy, like we're leaving the stock market. No. I mean buy stocks, buy stocks, buy stocks. If you look at every time period, we went VIX 40 plus. There's never been a time period where it wasn't an incredible buying opportunity. The only way you get VIX to go 40 plus is in a time period where people are freaking out. People are in panic. And let's be very crystal clear. People are in panic in this market right now. Absolute panic. I'm listening to CNBC. I had Bloomberg on last night. I'm listening to Wall Streeters go on these networks saying they sold out of their entire portfolios. All they own right now is SQQQ. They're out. They're done. Then they'll enter back in whenever the time is right? Which we know that timing game is a foolish game. It always fails. We do know that. But still, even the Wall Streeters still can't get it through their heads that they're going to underperform the market by trying to play this game of in and out of the market. But whatever. It's not my money. It's their money, right? It's not actually their money. It's their clients' money, by the way. So we're looking at a VIX of 40 plus. So when have we seen VIX go 40 plus in the past, right? Well, you saw VIX definitely get very, very elevated in 2022. What was 2022? It was an incredible buying opportunity. If you were buying tech stocks in 2022, especially in the back half of 2022, oh my gosh. I mean, there were steal deals all over that market. I mean, Meta went under $100. Netflix at that time was under $200, Netflix. Shopify went down to like $25. And look at all those stock prices even after this recent crash in the market. I mean, the Nasdaq's now down over 20% from recent highs. And still, you look at any stock in basically all of tech, you would have so gladly have been buying that stock in the back half of 2022. You made silly money, right? If we look here, we had a VIX go way over 40 here and in a very unprecedented time. That was in March of 2020. What was March of 2020? One of the greatest buying opportunities you ever got, right? And then we go back, we have a time period here in 2011. I can't even remember what this was back then. I think somebody defaulted on their debt or something like that. Or did the U.S. get downgraded as far as our debt? I literally can't even remember what happened back then in 2011. I also remember there was a lot of double dip recession fears around 2010, 2011 that we're going to go back into recession. I'm having trouble even remembering what transpired here, but we had VIX go 40 plus. Great buying opportunity, by the way. Right here, we had VIX go 40 plus. This was probably double dip recession. This might have been US downgrade on debt, or something happened in Europe. I can't remember. But moral of the story is both of those time periods were unbelievable times to buy the stock market. Right here, October 2008. What a great time to be buying stocks. Are you kidding me? October 2008, that wasn't just a generational buying opportunity. That was a multi-generational buying opportunity in October 2008, right? And then we saw the VIX spike back up again in February 2009, and it went to close to 50. I could tell you, if you were buying stocks in February 2009 into March of 2009, you literally bought the bottom of the market. Like, what a time to buy. If we go back here, and this is over the past 25 years of looking at the VIX, right? Around August 2002, great time to be buying stocks. Oh my gosh, this was, almost at the lows of kind of the tech bubble popping there. Right here, September 2001, why would the VIX had spiked to 40 plus in September 2001? I think there was something that happened. There was something kind of big that happened back in September 2001, if I recall, right? Every time the VIX goes 40 plus, let me be very crystal clear about this. If you are not buying stocks when the VIX goes 40 plus, you will look back with immense regret. I'm not talking a day from now, I'm not talking a week from now, and I'm not talking a month from now. But a few years from now, it's been proven, like decade after decade after decade, it's been proven. If you're not buying when the VIX is 40 plus, what are you doing? And the more insane the VIX goes, the more of a generational or multi-generational buying opportunity you get. You get a VIX go 50 plus, oh my gosh, like that's ridiculous. A VIX going 40 plus is already ridiculous. You have to be buying. You have to be buying during those sorts of time periods because they're freak events where everybody's in complete panic mode. And I mean, look at the way these stocks are reacting. You got MU, the biggest memory chip company, you can pretty much invest in as far as a direct play. Look at that company. $65. I swear it was just yesterday MU stock was like $105. Was it not? Like let's pull up in MU here. And let's go ahead and take a peek at this one. Look at this baby. This was, if we go back just to January, $109, right? $109 just back in January. Tesla's getting obliterated here today, 9.8%. Shopify's getting nailed again here today. Snowflake. Look at AMD. $86 for AMD. $86. With all the growth AMD's going to have over the next many years, come on, man. They're selling. This is the sort of market you get into when people are like, I don't care what the stock price is. Get me out. Fundamentals no longer matter in this sort of market. I explained this very well back in 2022, and I need to bring this point back up. There's two types of market where people throw out fundamentals, and they say, I don't care what the price is, get me in or get me out. Those two time periods, one when you're in an insanely bullish market, and it seems like every day you wake up and you're like, oh, I just made more thousands of dollars, tens of thousands, hundreds of thousands. Every day I wake up, I get so rich. People start to throw out fundamentals in that market. And they're like, just buy anything because it goes up every day, right? That doesn't last too long. The other sort of market where fundamentals no longer matter is when you're going through a crash in the market and everybody's in panic mode because people start just selling stocks at silly prices. Like, I don't care what the price is, get me out. People sold me. Investors sold me Meta shares in 2022. I have them $88.94. Does that make any logical sense? No, of course not. It's ridiculous. People are willing to sell Netflix under $200 a share in 2022. Does it make any logical sense? No, it's flat out silly. People sold Shopify stock down to $25 in 2022. Make any logical sense? No, it's silly. But when you're going through a market of panic, being pragmatic, looking at fundamentals, people stop caring. They say, just get me out. Sell it. I don't care. I need out, right? Then you also have margin calls. When margin calls transpire, and we have seen, what did I tell you guys? I pointed this out back in January. What did I point out to you guys several months before we had this crash? I gave warning after warning about valuations being extended Additionally, I give warning after warning about margin. If you were watching my content back in that January, kind of into early February time, I showed all the data. Said, look at the margin. It's popped back up huge again. We're at numbers we haven't seen in many years. Boom. What happens right after that? A whole massive flush in the market, right? What was I doing at the end of 2024 and 2025? Documented it all on the channels, taking huge profits in stocks that were reaching ridiculous valuations. Tesla, Palantir, others that, some of the valuations just got to silly levels. It doesn't mean those are bad companies. It's just the valuations got way out of whack because people started not caring about anything. It was only up. And I'm looking and I'm like, Palantir is $120 something. Forward P is what? Yeah, I'll take some profits here. When people are doing silly stuff, you got to react and you got to take the other side of that. And so when people are doing silly stuff, like they're bidding up stocks to any price, take profits. That's when you got to take profits. When the valuations are getting absolutely absurd, got to take profits. And when people are willing to sell stocks at any price just to get out, you better be buying. You better be buying, right? And that's what we got going on in this market. Let's be very crystal clear about this. Looking at Nvidia, $94 here today. Whew, the issue, the biggest issue having this Uber 64, the biggest issue with this market right now is there's too many stocks that are at great pricing now. There's too many stocks. I'm looking out there now. I'm like, oh my gosh, I bought a bunch of stocks here today. I can tell you there's 20, 30, 40 more stocks I would have loved to buy today. Literally, there's so many deals out there at this point in time. I'll tell you all the stocks just here on big tech that's a buy today. MU's a buy today. Shopify's a buy today. AMD's a buy today. Avago probably a buy, but I don't track that company super well, so I'll leave that off. Nvidia, believe it or not, a buy today. Uber, buy today. Netflix, probably an okay buy. I don't love it here, but it's an okay buy. Oracle, I'd even say that's a buy today. IBM, probably a buy today. Apple, don't love it, but it'd still be a moneymaker over the next few years. Buy today. Intuit, I don't love it here, but it's still a buy today. Meta, buy today for sure. PayPal, for sure a buy today. Adobe, for sure a buy today. Microsoft, buy today. Google, for sure buy today. Amazon, for sure buy today. That's just big tech. We haven't even gone outside of big tech yet. And there's so many stocks that I'm like, I'd feel comfortable putting $100,000 in that stock today, $10,000, $1 million, whatever. There's a lot of stocks. Look at housing stocks here today, right? Now, housing stocks are showing potentially early signs of bottoming here. And the reason being is if you look at the 10-year Treasury continues to fall, which is seen as probably likely a positive catalyst for housing come the back half of this year. So, don't be surprised if some of the housing plays bottom before a lot of other stocks bottom, right? And so, I wouldn't mind adding to, something like a Whirlpool here today. It's not a stock I own right now, but I wouldn't mind adding a Whirlpool at $82. I'd feel very comfortable because I do believe the housing market's going to start getting actually moving a little bit in the back half of this year. And then I think we'll have several years of a ramp of people starting to actually move again in 2026, 2027. Because let's be very crystal clear, the housing market has been frozen for years. And so as it thaws out over this next year or two, I think there's going to be a lot of money to be made. Not necessarily in all the home builders. I don't love the home builders, but I like a lot of the plays like a Whirlpool. Because a company like Whirlpool, this is exactly a type of company that, by the way, and this stock has gotten wrecked on a 5-year basis down. And you could look from the highs here. This is in great times for the home builders, or excuse me, for the, there's a lot of people moving back here around this time, right, of 2021 into 2022. A lot of people were moving. And then as we went throughout 2022 and mortgage rates spiked, that's when obviously the housing market started to become frozen. And basically from the second half of 2022 all the way through today, the housing market's been completely frozen, right? And so a stock like Whirlpool has gone down 67% in that time. And so don't be surprised if Whirlpool bounces back over the next couple of years and then is all of a sudden, a $200 stock again, right? Does it get up to $250? I don't know. I don't know about that. But could I see it going to 200 over the next few years? Yeah, that's definitely a possibility, right? RH continues to get leveled. You know, RH is somewhat tempting to step in. It's just I still don't want to step in because that balance sheet's bad, man. $30 million of cash? Ugly. They do have a ridiculous amount of inventory, so they better hope all their customers like go buy stuff, you know, in this next 6 to 12 months, so they can deplete that inventory and actually raise some cash from all that, right? But yeah, so then we go ahead and we look at my possible buys watch list, right? I mean, my gosh, look at the Planet's 17 cents here today. Look at this is like basically like a leverage play on the Russell. Man, that's pretty dang tempting right now. That's pretty dang tempting. MU, I even had that one here recently onto the list. SoFi, $9. Come on, baby. Fubo, are you kidding me? Look at EL, Estee Lauder, $53. Come on. $53 on EL? No way. No way. Come on. This stock is now down a whopping 85% from the highs. Oh my gosh. We spoke about AMD, $86 here today. Honest is looking like a snack at $4. Middleby, you know, that's a really interesting company. They almost have like a little bit of a monopoly on restaurant equipment. So it's a company I've done some digging in, and I like that one. Trade Desk, been doing some digging on that one. I like it as well. Both stocks I haven't bought yet, but I might eventually buy it. You know, looking at Cake here today, looking like a snack at 45. Nike, obviously up, bouncing here today, right? So we got drama all over the place. Now, I want to show you guys some important things here. Let me minimize this. I want to show you guys some very important things I posted here. So obviously I posted about VIX, right? Yeah, got to be buying when the VIX is 40 plus. Because here's the thing, like I put here, every time investors bought with the VIX 40 plus, those investors made a fortune a couple years later, right? 5 days later, 5 weeks later, 5 months later, that's anybody's best guess. But the moral of the story is, every single time the VIX goes 40 plus, it's a huge buy the dip opportunity. You say, this time's different. What do you think they said during the great financial crisis? What do you think they said during Rona? What do you think they said during, you know, every other time period in the past? They always say this time's different. All stocks to zero. Everything's zero. We're all going to zero, right? Fear and greed index, 4. Oh my gosh. I put this, I said fear and greed index just hit the lowest number since March 2020 when the worldwide economy was being shut down for what many believed was going to be years. The market is more fearful than during the 2008 great financial crisis. I mean, it's literally, you got to understand, like, everything is literally about as bad as it can get. Like, literally. What are we going to go to, a 2 or a 1 on the fear and greed index? Like, it can't go below 0. We're almost at 0. That's how fearful this market is. And what do we know? The great Warren Buffett saying, you know what it is, right? Buy when others are fearful. Be greedy. Oh no, be greedy when others are fearful. That's the proper way. Be greedy when others are fearful. Be fearful when others are greedy, right? Now, this I posted earlier, we are at a 6. Then we went all the way down to a 4 in regards to fear and greed index. Now, this is very important. I posted this late last night. I don't think a lot of people got to see it because I posted it so late at night. But I said, I have something important to show you. This AI investor sentiment numbers. This survey has been done since the 1980s. This is the most bearish 6-week span in history of the survey. If you look back to every 6-week span, you've never seen one this bearish, with numbers this bearish. For a 6-week period, this is unprecedented. Even in the great financial crisis, even during the Rona crash, even during all these other time periods of insane volatility, right? 60% plus bearish, 57%, 59%, 58%, 52%, and 61%. Shockingly high bearish numbers, right? Shockingly high. And guess what? New data is going to come out in a few days in regards to the survey. What do you think is going to be again? Unless things magically change and, you know, tariffs start to be removed and things start looking great. My guess is when that report comes out another, 4 or 5 days from now, it's probably going to be another week of insane bearishness. But that's not going to last. Like, none of this stuff lasts. You don't stay in an extreme fear market forever, right? Eventually you get out of that extreme fear, the sun comes out again, and people are like, oh man, yeah. So, by the way, and yeah, if you want to follow me on X, certainly I'll have that as pinned comment down there today, okay? Now, what did I buy? Because I was out there buying today, like everybody that should be when the VIX is 40 plus. So what did I buy today? Well, I bought a lot of stocks first off. So I bought stocks in the public account as I do every Friday. I bought stocks in the Patreon portfolio as I do every Friday. And I also bought stocks in one of my private portfolios, as I do every Friday. But additionally, I did a big money buy. So I always put a certain amount of money into each portfolio every single Friday, the same amount. But I did a big dog amount in another portfolio here today. I moved over $51,000 from savings, and I went ahead and bought. Honest, I bought $4,400 worth of Honest. I bought around $4,000 worth of Win stock. I bought around $7,500 worth of Shopify stock. $13,000 of Amazon. I did a big boy buy of AMD here today in that portfolio, $19,000 buy. And then ELF, I bought $3,000+ worth of ELF on a shelf here today, right? And so, I think we're going to look back a few years from now on all these stocks that I bought today, and we're going to be like, that was crazy. Like, can you believe they sold up blah, blah, blah stock to that price during that Trump tariff crash? Can you remember that? Remember the Trump tariff crash? By the way, crashed. Look at this. My wife tried to... Look at it, the Amazon drone. They tried to order something from the Amazon drone, and I guess it crashed. Kind of like the market, right? Oh, man, fascinating times. Okay. Let's go ahead and react to some videos here. And by the way, congratulations to everybody out there buying stocks. Congratulations. You are the few, the proud, not the Marines, but you're the few and the proud of the stock market. Because, man, I can tell you, this is a sort of market that a lot of people have a lot of trouble buying in. A lot of trouble. For me, it's easy. Like, I just got some sort of mentality that, like, I see all this and I'm like, let's freaking go. Like, this is what we live for as stock market investors. Because when you're buying during these time periods, you just know you're going to make so much money in the end, right? Oh, this time's different. This is one time we'll never make money. Okay, that's fine. That's what they said in 2022. That's what they said in 2020. That's what they said in 2018. That's what they said in 2015. That's what they said in 2008, 2009. That's what they said in 2001, 2002. Right? That's what they said in 1987. I mean, that's what they said in the 70s. We'll go back every decade, they say. Especially when you're going through some sort of this was the end of America. This is the end of the global economy. We're done. We're finished. This is it. Nope. Can't come back from this. Come on, man. Come on. And then, they're going to be like, oh my gosh, that was like a magic trick. How did we make it?
Look at and say, it's so bad, it's got to be good or close to it at this point. I point out your move today in Nike, down 15% this week, right in the crosshairs of tariffs related to China. And you bought it. You bought the stock. Why? Why now?
Really more Vietnam. I bought it yesterday, and really it's in relation to Vietnam. And so I think that whoever made that board that Trump had out should be fired with the math. Vietnam does not have a 90% tariff. It's absurd. They have a 5% tariff. And so what we have to decide as a country is what...
Ma'am, it's politics. These politicians, they lie consistently all the time and fabricate stuff. That's welcome to the world.
We want to manufacture here, and what do we actually want to manufacture in great countries like Vietnam? Nike, Restoration Hardware, Wayfair, all moved much of their manufacturing out of China during Trump's first presidency into Vietnam. Vietnam is happy to make these. Nike pays these people probably like $5,000 or $6,000 a year. They're happy to make them, and we do not want to export those jobs. My sense is there's going to be a reckoning between the U.S. and Vietnam. And actually, I think 20 minutes ago, Trump posted on his True Social that he just had a conversation with the General Secretary of Vietnam, and they want to bring down their tariffs, which once again are 5%, not 90. And so to me, it's like a beaten up name. I just think it's overdone. I think the stock could trade back up to $70 pretty quickly, because we do not want to import these types of manufacturing to America. Exactly. No Americans want those jobs. So to me, it was a trade. I think it's a fat pitch. I think Wayfair, Restoration Hardware, I think you're going to get some reprieve from these types of American companies doing the right thing.
Exactly. No one wants that job. I don't know one person that's like, oh, please bring back the shoe manufacturing in the United States. I can't wait to get a job at the factory putting the shoes together. I don't know one person that is like, oh, yes, let's go, baby. Go down to the shoe factory. We're going to make Nikes. Oh, let's go make some Nike socks. Yes, I can't wait. Let's go make Nike socks every day. oh, I can't wait. I don't know one American that's like, sign me up for that. Let's go, baby. No. But in other countries, like, that's a good job. Like, I'll gladly take that job. Putting shoes together, let's go. You know, making socks, making hoodies, making shirts, making hats. Gladly do that job. But in America, like, we move past that, right? And so, you know, it's just hilarious, right? There's certain manufacturing jobs I can understand. You know, you want to have, you know, higher dollar amount stuff. I could even say some furniture, right? Could be a good example. But appliances, right? Cars, autos, things like that. Okay. But to say, let's go, you know, like high-end electronics, high-end semiconductors. That's the sort of stuff that it's like, yeah, that makes sense. Let's manufacture that in the United States of America. Socks, shoes, shirts, towels, beach chairs, wicker. What are we talking about? Come on, man.
50% chance of U.S. recession beginning this spring. Joining us here at Post 9 is J.P. Morgan Asset Management Chief Global Strategist David Kelly. There will be blood was the title of one report last night.
Yes, from our investment bank. I mean, I want to make it clear. I think that there is at least a 60% chance of recession if these tariffs stick. And I know, you know, one scenario is that different countries try to negotiate them down. An even better scenario, of course, for
Oh, and by the way, not only is there no workers that would gladly sign up to go make the shoes and the socks and all that stuff, right? No one's going to want to pay the prices, because then suddenly, instead of paying somebody $5,000 a year in Vietnam or wherever to make that product, then you're going to have to pay $30,000 or $40,000, which means the price of that product is going to be massively more. So everybody's going to pay massively more. Doesn't matter what shoe brand you buy, what sock brand, or what shirt you buy, or whatever. You have to pay massively more for that. No one wants to do that, right? No one wants to do that. And so, you know, that's another thing that should be factored in regards to this whole situation. You got no one that actually wants to do that job, and you have no one that would gladly pay more money for what? A product that's probably going to be made worse quality. Like, I highly doubt if we made shirts and socks and shoes and all this stuff in America, I highly doubt the quality would be better in these other countries. Because once again, these other countries, you get workers that this is like a good job. Like, they respect this job. Like, they take it serious. In America, you think anybody's respecting a job of putting socks together? Putting shoes together? Come on, man. Making hoodies? You think they're going to respect that job in America?
Would be if the president decided to postpone the implementation of reciprocal tariffs while he goes country by country and thinks about it. Because if we got a tweet, you know, in the next, you know, at any point, which said, okay, we're going to go back to 10% across the board, and we're going to look country by country at reciprocal for whatever reason. If we saw that, then I think the markets would recover. 10%'s not good. By any means. Tariffs generally tend to slow the global economy and hurt the market, but it's a whole lot better than what we're looking at right now.
You're kind of mind melding.
That's a risk for the market I don't think is talked about enough. And, you know, you got all these people like, oh, I'm not buying right now. I'm going to buy next week, next month. I'm going to buy at the market bottom, things like that. Listen, this market could flip in a snap of fingers the other way. If all of a sudden over the weekend, Trump says, you know, hey, we got this country agreed, or that happens some point next week or something like that. Oh, we got deals going through left and right. We're getting our way in regards to all this. So we're going to remove this. This country's going to remove that, blah, blah, blah. You know how fast the market will switch to the upside? You'll get a knock your socks off rally like you never seen. And people will be like, what? And then you have no time to even take the other side and be like, now I'm going to start buying, because it's going to happen so rapidly that people are going to say, wait, this can't be real. Like, it's about, like, the S&P 500's up 7% today? What? The Nasdaq's up 9% this week? I can't buy into that. We're going to have another sell-off, right? And then it goes up more and more and more, and then all of a sudden you're back at all-time highs. People are like, what? How are we at all-time highs? We still got blah, 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 blah. It happens quick. It happens really quick. So don't bank on that. Don't think, oh, I'm going to play short-term call options because, you know, at some point we're going to get a massive flip here. That's also a losing game, because who knows? We could keep going down for the rest of this month or for the next few months or something like that. But the thing I'll say is, when things do flip the other way, it's going to be violent. It's going to be insane. And so, you know, yeah, that's the part that a lot of people miss.
Blankfein, who tweeted a moment ago, as we said, make the 10% minimum tariff immediate, but defer the reciprocal part 6 months. Take the win. President said he'd make us tired of winning. I'm there now, is what Lloyd argues.
Yeah, they're very sensible. And then if you go through, I mean, tariffs are bad, so there's nothing wrong with saying that, you know, Europe needs to get rid of its tariffs. The best reciprocal tariffs are 0-0. Absolutely, and really we should not be using tariffs as a revenue source. It's the most destructive of taxes. There are other ways of raising money. Tariffs are really the worst way to raise money.
But they have framed it as a revenue engine.
Yes, unfortunately they have. But the problem is, first of all, it's a very regressive tax. Tariffs, even more than the sales tax, the poor and lower income households pay a greater percentage of tariff taxes than say, income taxes. So that's one thing. But second of all, it just slows down productivity. It slows down global commerce. I mean, the United States can so flourish. We're the best in the world when it comes to competing in free enterprise. Why not take advantage of that? And I feel like I'm echoing something that Milton Friedman or Ronald Reagan would have said. I feel like this is the most conservative viewpoint you could take, is let's flourish under free enterprise. That's what we should be doing.
But you know that President Trump channeled, I think, a lot of frustration, particularly in the industrial Midwest, where jobs have left and manufacturing share has gone to China.
Yes.
He campaigned on it. And I think that he's there, and he feels he has survived 2 assassination attempts in order to do this and level the playing field.
But it's so important to understand what actually causes our trade deficit. You've got to get the pretext right. There are 2 things causing our trade deficit. One, for years, we've supported the idea of we want a strong dollar. Why do you want a strong dollar? I mean, the dollar is not our national flag. You fly the stars and stripes as high as possible, but the dollar should be at an appropriate level for your economy. The dollar's been too high, and second of all, we run a big budget deficit. And it is a mathematical certainty that if the private sector is balanced and the government spends beyond its means, then the country will import more than it exports.
Yes,
You'll have a budget.
The logic, is not rooted in economics.
But if that is what is causing the problem, then address those 2 things. I fully support the administration's view that we ought to bring the dollar down. We should bring the dollar down, and we should bring down other people's trade restrictions. And I think we have the bargaining power to do that. But please don't put tariffs, build walls on global trade, because that actually slows everything down and makes people poorer.
So how do you think the Europeans think about this?
Well, they're very angry, but they are being careful they don't want to harm their own economy, because one of the odd things is that even if somebody puts a tariff on you, actually the optimal strategy is probably not to put a tariff back on them, because you're only hurting yourself twice. A tariff hurts the person who puts it on, but also as well as the person.
That's what China did.
Well, yes, but I think China is trying to, just trying to play tough here and try to really force the U.S. to capitulate here. But really, we don't, we need to have trade partners, not trade adversaries.
So, I mean, President doesn't agree with you. So what should you do as an investor?
Well, I think, first of all, you should recognize that policy will change. Markets matter, economies matter, elections matter. And I think that it's quite possible that policy will change. The second thing is, and this is true regardless of this event or any other event, look to valuations. When you never know the hour nor the day of a bear market, but you know eventually there's going to be one. But what you do know is where it's going to be concentrated. It's going to be concentrated in the stuff that are the most hype and euphoria and speculation in it beforehand. And we're seeing that with the Mag 7 coming down, with crypto coming down. So you want to just look at valuations and be very diversified in a sophisticated way.
That's a bad comp to say Mag 7. Come on, man. Like, going into this mess, it's not like the Mag 7 were trading at ridiculous valuations or something like that. Several of those Mag 7 stocks were trading very fair valuations. If you look at their trailing 12-month Ps or forward Ps, their PEG ratios, price to earnings growth, like you use 1000xstocks.com, look at all that data. And now a lot of them are steal deals again, right? So I think that's just a bad comp to put Mag 7 stocks in the same sentence as crypto. Come on, man. The other stocks that, a lot of retail investors or traders were playing at the end of 2024 into the beginning of this year. That's unfair. That's completely unfair. So, recession, we'll see. We'll see what happens. I feel like things are so chaotic right now that you can't even put a recession on things right now. It's too chaotic. It's too crazy. We don't know what, these tariffs could be removed or altered a week from now, 2 weeks from now, a month from now. It's too crazy right now to even try to predict recession or no recession or strong economy a year from now or bad economy a year from now. There's certain time periods when you just have to hold your nose and buy stocks. And that's in time periods when the VIX goes to insane high levels, right? And this is one of those time periods. You got to hold your nose, because whenever you're going through that time period, you never know how it's going to work out. If you were buying stocks like I was in the great financial crisis and coming out of that, you didn't know how it was going to work out. You just had to hold your nose and buy stocks. If you were buying stocks when the double dip recession fears came in 2010, 11, and all the other drama, hold your nose and buy stocks. If we look at 2015 and that drama time period and everything that was going on with China slowdown, and there was a lot of fears around that, and also there's a fear about 7 years since we had the 2008 financial crisis, and we usually have a recession every 7-8 years, so we're going to go into recession. So we had a bunch of drama in 2015. Stocks sold off quite dramatically a few times along the way, right? Hold your nose and buy stocks. March of 2020, talking about the economies could be closed for years, right? Who's even going to not go bankrupt over the next few years? Shoot, hold your nose and buy stocks. You know what I mean? Like, there's certain time periods you just have to do it. 2022, same thing. This time, same thing. And so, how it all works out, we'll get a lot more clarity, I think, over the next 60 days. With that being said, by the time you get the clarity, stocks are already going to bounce back immensely. Because as things get more clear, as people can see through the smoke better, they feel more comfortable. When they start to feel more comfortable, they start to invest more. They stop selling. Then when you stop getting any sort of major selling pressure and you start just getting a little more buying pressure, what happens? Prices go up and up and up as you get more and more demand for stocks and less people. Because you got to understand, what is going on right now? Everybody that could want to sell stocks is selling stocks right now. So what happens a week from now, next week or a few weeks from now, when everybody that could have wanted to sold has sold? Well, what do we know? There's always buying pressure in the market, right? Because the massive amount of people that have jobs are always investing a certain amount of money into their 401ks through their jobs, right? Consistently, all the time, right? Then you have all these people that have gone to cash. As you start to get little bits of those people to see through the smoke and the fog, as time ticks on, they're going to start to buy more and more stocks. And then who you got left to sell when everybody that wanted to sell has already sold? That's how market bottoms happen. People think, market bottom happens when everything's great again, you got a great economy, boom, boom, boom. No. It's so false. The market bottom, the double bottom in the great financial crisis. It bottomed once around October 2008, and then it bottomed again, kind of like a double bottom situation in February, March of 2009. The economy was not good in October 2008 or in March of 2009. The economy was not good. Unemployment rate was going higher. More businesses were going out of business. No one would have said the economy was getting better or is better. But yet the stock market was already bouncing back. And so the market plays this game out ahead of time, because by the time you got to March 2009, everybody that could have wanted to sell had already sold. They would have sold in the fall of 2008, into the winter of 2008, and into obviously the very beginning of 2009, right? And by the time you get to March, like, everybody that wanted to sell has already sold. And you're starting to get a little more clarity about, the economy is probably going to get even a little bit worse from here. But you know what? The Fed's starting to kind of make some moves here. We can start to see how maybe the economy could start to bounce back maybe a year from now or a couple of years from now. So you know what? I'll start buying little stocks here and there. Boom! That's how it happens. Same thing in 2020. It was still very uncertain even, when that market bottomed, in March, April of 2020. Isn't it funny? Isn't it funny how many markets bottom around March, April? Isn't it funny we're in April right now? That's interesting too, isn't it? Huh? Put pieces together here. Alrighty, let's get into this one.
Closing 6% lower today. Joining us now, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, it looked pretty ugly out there today. You're usually bullish on the potential for technology, but this picture is complicated, not just by the dollar impact of the tariffs, but by what happens to brand America around the globe, where even this software has to be sold, no?
Yeah, look, it's essentially an economic Armageddon. if these tariffs stayed in place. And the reality is talking in front of a microphone in the 202 area code is a lot different than the reality of moving the supply chain. And I think it speaks to our point that when you look at China exposed names from NVIDIA to Apple to any of the semi names, I mean, this is as nervous as I've seen investors going back to, COVID March 2020.
So what do investors need to listen for on these earnings calls? What are the fundamental numbers to watch, perhaps when it comes to margins getting squeezed, to understand what the real dynamics are going to be throughout the rest of 25 and where you can continue to get a valuation premium?
So I think there's three things I think you have to look at. One, Navarro talked on negotiations. You have to assume that these tariffs don't hold in their current form. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through. And to that point, I don't think a lot of companies even give guidance on their 1Q conference calls, given what we've seen in terms of the head-scratching tariffs. The thing that you really have to focus on in terms of
watch how the market closes in the last hour of trading. That's going to be really interesting, because I actually think if you're trying to play the whole short-term game that these traders play, a lot of times they won't want to hold over a weekend, right? I think there's more risk to not holding over a weekend right now from a trader perspective than to essentially sell before the weekend. And the reason being is, since you already have so much fear, what happens if over the weekend, I don't know, Trump has some meetings and, he has an interview and he says, oh, things are going pretty good with these negotiations. We should have some things to announce, a few weeks from now or a month from now or something like that. Or we're gonna have a new day. It's going to be Liberation Day Part 2, and it's going to be, announcing all the things that we fixed and all the tariff reductions and stuff like that. Dude, do you know how much the stock market would be up pre-market on Monday? I could see a Nasdaq up 6%. You know what I mean? It would be insane. So the Russell would be up 9%, just a ridiculous number if all of a sudden that happened. Now, that doesn't mean that's going to happen, but that's the risk to not holding stocks over a weekend right now, which is why I'm going to be very interested to see how this market closes in the last couple hours here and to see if it strengthens rather than weakens. Because usually when you're in a market that's scared, usually the market will weaken in the last couple hours of trading, because people are the traders say, I don't want to hold stocks over the weekend. But this market, I think there's more risk to not holding over the weekend than actually hold it, than to sell out of everything. So this should be interesting.
And destruction looks like, in terms of when it comes to AI revolution, data center build out, inventory. And then, of course, you start looking at consumer focus, names like Apple, in terms of what that means for iPhones. The reality is, if you want an iPhone made in the U.S. and you want that for $3,500, we should make it in the U.S. If you want it for $1,000, you keep it in China. So I think these are all the issues that investors are trying to sort of game out.
So in light of that, I'll just use Apple as an example. There's just this automatic assumption that any kind of price increase tied to 54% tariffs on goods imported that have been made in China, iPhones perhaps included in that, is going to be pushed out to consumers. Is that actually going to be the case, especially if you look at an Apple that has pretty robust margins and maybe is going to absorb some of that cost?
Yeah, Mark, if it was a smaller tariff, that's something that maybe that they can absorb. But these are numbers, that are, I view as absurd, and I think many view it across tax. So there's only whoever's going to pay it, it's the consumer. And that's the reality. You can talk about tariffs all you want. Consumers are going to pay it on iPhones. They're going to pay it on electronics. They're going to pay it across the board. And that's really what you're seeing in terms of self. I think right now, tech stocks, you look at a name like Apple, essentially baking in numbers cuts, 12, 15%. And margin erosion that could be more. So our view in terms of how we're navigating this, very similar financial crisis days, COVID 2020, is that you have to look on the other side, assuming some sort of normalized earnings into 25 and even 2026. And those are the names, whether it's Microsoft, Apple, and some others. That's how you navigate in terms of, looking at the scenarios in terms of how these play out.
The biggest risk to Apple is actually not what he's talking about there. The biggest risk is the EU coming out and saying, okay, since you guys are doing those tariffs, what we're going to do is we want 15% of the 30% you guys take from our companies and all the services revenue you guys generate. We want half of that money, right? Whew. You know, that's a big hit to a company like Apple because they make a lot of money in Europe in regards to, their services side of the business, right? I call it the Apple tax, right? The 30% they get. And so if all of a sudden that happened, big hit to Apple, right? That's a big risk. Same thing for Meta, Google, any companies that do business in Europe, right? If all of a sudden they say, we want this much, you can't operate here, it's a big number. And so that's the risk, I think, to a lot of those big tech companies is on the software side, them doing something like that. Will they do it? I don't know. But it would be a risk. And, they could honestly enact it. And there's really only positives for them in the end in regards to that.
Because we did get exemptions on semiconductors in the midst of these tariff announcements. But another area of the market that was very defensive today and held up relatively well were defense contractors themselves. Now, I realize not necessarily the case for the Palantirs of the world, but in general, when you're talking about some of these types of companies that are exposed to government revenues, that maybe are a little more domestically focused in terms of the stacks they've built out, is that a place to be investing right now?
Yeah, and I think Palantir and others, but if you look at Lockheed and some of the primary, no doubt, those are ones that held up, I think, a lot better in terms of defensive. But I think devil's in the details, because the reality is when you look at the implementations, you look what comes from foreign perspective, you're talking 40, 50%. A lot of these implementations from...
By the way, I think I'll answer this question because I'm sure there's a lot of people who would be interested to know my thoughts on this. Where do I view Palantir as an active buy again? Like, what price does Palantir stock need to be to, in my opinion, be an active buy, like a good buy again? My opinion is Palantir under $60 is a good active buy again. That will be the valuations come down enough to get compelling again, based upon what I expect Palantir to have for future growth over the next number of years here. So under 60 is then an attractive. Under 40 would be really, really attractive again for Palantir. Now, outside of a massive stock market crash, I don't see it going under 40 again. Under 60 is always a possibility. Like if you got the S&P 500 down another 5-10%, let's say next week is another bad week, we don't get any positive catalysts or something like that, that's always possible. And so under 60, good. Under 40 would be ideal, right? Under 20 for Palantir is almost impossible now because the company just has too good of numbers. So, that ship sailed a long time ago.
Hardware perspective and others. So that's why our view is and to your point, John, is what are the second, third derivatives? What's the ripple effect? What the demand destruction is? I think investors, if you look here, these stocks are baking in recession into these stocks. If you think it's anything better and you're basically saying some sort of game of high stakes poker, and there will be negotiation, then these are the names that you ultimately buy. But look, it continues to be, if these tariffs stay, we've said in tech, it's an economic Armageddon.
All right.
Oh, baby. Fun times, folks. Fun times. Make sure you take advantage of all the deals out there over this next few weeks here, next few months, however long we get this drama to last for, okay? If you want to follow me on X, I'll put that as pinned comment down there today. I'll also put my Instagram down there, and you can follow me on there. I'm posting a lot of stuff. Alrighty, guys, much love, and have a great day.